Hello guys, welcome back to another video from mykayaplus. So I'm JP, together with me is Chunbei. So I think today's topic will revolve around an upcoming IPO of a company in the name of Agmo Holdings Berhad. So we will share with you our thoughts and our analysis after going through the prospectus. And of course, one of the main highlight or main selling point is that MYEG is actually backing this company. So does that mean that this company is actually, destined for success when the IPO? So we'll go through some details and we'll actually find out. So of course, disclaimer, whatever we'll be sharing today is just for personal opinions, right? It does not contribute to any buy, sell, or hold decision. So with that said, let's go into what Agmo Holdings Berhad is all about. So Chunbing, what is this company all about?
Yeah, if you are interested in this company because of the big name like MYEG and so on. So I think before you actually jump into the conclusion, let's go through what this company is all about. So basically, this is a company that's focusing in building digital solution for companies. So be it your websites or your mobile application, so on and so forth. So they are basically like an outsourced ID vendor that serve all the big companies. So if you to give you a little bit more details on what they are actually doing, this is basically the three key pillar that Agmo groups is actually offering to their customer. So the majority one is actually the development of the mobile and web application, and then along the way when they actually set up the company, recent year they also actually come up with some of their internal branded so-called digital platform. So there are four, which is Vote to You, which is a voting related application. Eat to You, something like your food delivery application. More health and also Agmo loyalties, which is focusing into offering healthcare solutions and also the loyalty system for their customers. So this is more of something like a subscription being offered to the company and then for them to offer to their end client. And then the last one, they also actually provide some subscription and also hostings on behalf of some of the big boys. So for example, you wanted to actually host your website and then you can go through them. They have partnership with some of the big name like AWS, Microsoft Azure, and so on. But other than that, of course, when you develop your mobile and also web application, after you hand over the code to them, for example, me and Jupan have a company called mykayaplus, and then we actually develop a website. Actually, Agmo will be develop the website and hand over to us. So after we pay them one off, we might pay them like a very minimum monthly fee for them to do the maintenance. So this is basically some part, the third part. Besides all the hosting, they also do maintenance and support. So this is like the four recent financial year performance. You can see on the top, majority still hovering on the so-called one-off revenue, which is very much focusing into the mobile and also web development. And then over the year, they also start to actually increase the portion or the percentage of the fee revenue coming from the subscriptions, hosting, and so on. But of course, the other thing that is slightly interesting, which is the recent 2 year, you can see in the so-called darker green, is the digital platform that I mentioned to you just now, Vote to You, Eat to You, so on and so forth. In terms of geographical location, they are very much focusing into Malaysia. They got some exposure in Hong Kong, Singapore, and Sri Lanka. So you can think of it, they are very Malaysia-focused app and also web developer that serve the big companies and also SME. And then when we go beyond the business activity, so this is their financial performance. So you can see, especially the last 3 years, the revenue has been growing alongside with the so-called gross profit margin. So you can see, if you compare the gross profit margin against the so-called net profit margin, they are quite close. So what does it mean? Because they are very much into one-off kind of revenue. So they set up a website for mykayaplus. So they quote you, let's say 10,000. And then they already have direct cost, which is their developer, which is maybe cost them about 5,000. So in this case, it's about already 50% margin. And then nothing much they have other costs to incur. So that's why you can see they are having a very impressive gross and even net profit margin. But then just to bear in mind, this is very much into one-off business. So that's why this is something to put in mind when you wanted to analyze this kind of company. And now, of course, if you zoom into their cash flow statement, good numbers from the operating perspective. They have been keep on increasing the number of cash they manage to generate from operation, meaning they develop app and then they collect the cash. And then you can see they don't have a lot of investing activity beside there is a bigger numbers which is in the FY 2021. They actually use about 1 million plus ringgit to put inside FD, and then not much money in financing activity as well. All the number in here is mainly for declaration of dividends, not really they take loan to actually finance their business. So it's a very profit making company. They actually have client give them quotation, they collect deposit, they develop. After payment term, they collect back the money. So it's very healthy. And of course, they don't have any debt. We can see in the gearing ratio. And then you might also curious about how about their dividend policy. So far, they don't have any formal dividend policy, but they have been giving out internally to their internal shareholder for the past few years. So you can see the dividend payout ratio is quite high in the past 3 years. So it's about at least 40%. But of course, this is something that you cannot use as an indicator because they don't really fix the policy. It can change over time. And then some of the things that you wanted to actually look into this kind of company is they can draw a lot of contract, take a lot of projects, but then can they collect back the money? So the number being shared inside the IPO prospectus is also quite positive. So regularly, they will be able to collect back their receivable within 90 days, which is kind of a standard 90 days terms that you will give out to any companies. But of course, inside the IPO prospectus, they say typically they have 30 to 90 days kind of things. So it's kind of healthy. They do work, they can receive the money within 3 to 4 months. So not much of a concern from a receivable perspective. And then this is the interesting part that how they draw so many attention from the investor is because the major shareholder is actually myEG Capital Central Berhad. But of course, after IPO, it will be diluted further to 25.8% from the original 35%, which is being stated on the left-hand side. So you can see majority of the control still within their main management, which is the 4 guy on the top. And then alongside with myEG, probably is a strategic partner that bringing them a lot of business. So this is their structures before and after IPO. And then for you, probably this is something that you cannot find out directly from their IPO prospectus is after IPO is based on their original planned IPO price, which is 26 cents. You can actually get the market capitalization number easily. So the market cap is basically you use the targeted listing price and then it times against the so-called the number of enlarged issue share after listing, and then you can get about 84.5 million market cap. And then when you have this kind of number, you can easily get the PE ratio, which is one of the easy way for you to value the company. How you do that is basically you get the market cap and then you divide against the profit after tax from the latest earning cycles. So in this case, the 6.692 million is basically the number that they have recorded in 2022 from their financial year. So you can get about 12.63 P, not crazily high, and then a lot of positive number for this company, like no debt, increasing revenue, good margin. But what is the risk you should take note if you wanted to invest into this company? But before we go into the risk, so this is some of the information for you to know on how they plan to use the money they are able to raise from the markets. So you can see majority is for them to expand the team in terms of R&D, sales and marketing, and so on. And they also have a plan to actually set up some training and also development center. All these things to make sure their labor costs can be more optimized because you train your guys using your own training centers. Theoretically, it's a good move. And of course, they also plan to spend some of the money to do regional expansion to Singapore. And other than that, it's all the working capitals and also the listing expenses. Nothing, don't have a lot of insight from the how they plan to use the IPO fund, but this is just for you as a reference. So this is a few key risks that, from my perspective, I think if you're interested in this company, you should take note. So first of all, the price, the target share price is very, very low, which indirectly it can be manipulated by the big boy. So you can see maybe go in, IPO go up 40% and then it drops. So it's very easy being manipulated, means as a retail shareholder, you don't have much control and you don't know what and when to sell. If you are, you may become the victim of the pump and dump. So this is something to take note. Even fundamentally, this company is good because of the low share price. You have this kind of risk. The second one is about 85% and above is kind of like a one-off revenue. You get a 5 million project, good. This year you recorded a historical high. But this 5 million ringgit is not recurring. You get 5 million this year because you get a government project, but next year it's already done. They won't give you another contract. Economy now downturn or whatnot. And then what you can get back from the maintenance and support is maybe only 3 to 5% of the 5 million ringgit, which is very, very low. So can they maintain the consistency over the last 3 years, continue to grow the top line? For me, it's a question mark. I think if they're able to maintain, it's considered quite good already. But if you maintain, meaning your performance is about the same, but then your PE ratio suddenly go 10 times more. So is it worth it to go into this kind of stock? You should take note. The third one is, even though inside their IPO prospectus, they got list out a long list of competitor, and then it's like they are the clear winner from the margin perspective, revenue they are going to make, so on and so forth. But then for me, it's a good research. It also tell you that there are more market for them to actually able to conquer, because they only take about few percent, less than 10% within the market share for Malaysia. But then there are some of the big name they didn't mention inside the reports. Some of the Intel being set up by the agency. So some of the big name like Terato Tax is not being mentioned. So it's accurate to a certain extent, but it's not really comprehensive in my personal opinion. There are a lot more mobile and also web developer that's quite famous in Malaysia, is not being mentioned. So just don't take this as a source of truth when you make your judgment. So I pass to Jupan to maybe give a few opinion before we conclude the video.
Right, thank you, Beng. Of course, when you do analysis, numbers is just one part of the story. That's why we also put a lot of emphasis into business quality and also gauging the economic mode of the company, whether this company can continue to grow healthily and not just reach a certain ceiling and then choose to IPO at their best valuation. So of course, when it comes to companies within this space, as Chun mentioned, there are a lot of competitors. They are not the only company doing it. The margins can be great, but this is just the market rate and the kind of margin expectation that all of these agencies, web developers and also software developers, they are setting, right? So take it or leave it. Even if you're a new boy coming into the scene, you can also start off with this kind of margin. But at the end of the day, as what Chun mentioned, a huge chunk of their revenue is one-off basis. So meaning you say it's by project basis. Once a project's done, how can they continue to grow, which is going to be a big question. So I think if you look at it holistically, personally, it wouldn't be a company that I want to invest. And if you remember back the cash flow statement that we showed just now, you can see that there are some periods where they got the company, they actually paid out more than 100% of dividends payout ratio. So that means that they were actually trying to lower the cash position of the company, then only they go IPO. So they are taking out already some portion of cash before they choose to IPO the company. So that gives a little bit of insight of how the company's management will treat future shareholders. There's no guarantee that the company can continue to pull cash in so efficiently before the IPO and after the IPO. So this is something you need to take note of, and a lot of competition means that it will only get harder and harder when the company is bigger and bigger. So I think that's it from my side. Anything you want to add on, Junbeng?
No, I think hopefully we give a very quick background check of the company that's going to be listed soon. And then if you have any opinion or any things you wanted to check with us or any comment, you can just leave it in the comment section. And then if you like this video, feel free to actually give a thumbs up to us and share the videos. And then we really appreciate your time for actually viewing this until the end.
Yeah, thank you. So as you see, analysis of stock is not just based on figures, but also based on business quality. And if you really want to understand how we do it, not just for Agmo Holdings, but we also do it for companies all around the world, be it Singapore, be it US, and also Hong Kong, China. So we are giving you the opportunity to join us and also get access to our analysis to all these companies around the world. We will leave the caption to join our Kaya Plus Premium Club in the caption below. So sign up now and you can actually get insights and analysis on how we analyze growth stocks and also dividend stocks, and hopefully that can help you invest better in this kind of situation. So that's it for today. I hope you enjoyed the video. Do share it with your friends who are looking to invest in this company, and hopefully this gives them a little bit of opinion and insight. And we'll see you in the next video. And don't forget to subscribe to our YouTube channel. See you. Bye-bye.